Big news today is the single biggest drop in mortgage rates in a year. In fact, today rates are at 6.29%, the lowest in over a year. And that comes on the heels of a disappointing jobs report, disappointing for the market. However, in line with what the mortgage analysts have been talking about for quite a while now, because we've seen all these negative revisions that weren't really kind of giving us accurate jobs data. And so we would see rates spike on the news, and then on the revisions, it would just kind of peter out. So check this out. Let's get into the numbers. 6.29% 30-year fixed rate. This is a national average as of today. And here's what we're seeing in mortgage bonds. This awesome climb up. This trend is really good for mortgage rates. So as a reminder, each of these bars is a day of trading. So this is today, this is yesterday. Green and up is good for rates. Red and down is bad for rates. You can see this trend is moving sharply upward, which is certainly supporting better mortgage rates. Now, this is pretty crazy because if you take a look, as this historical average of mortgage rates over the last 50 years, we're looking at almost 8%. And why that's important is because we've got a lot of pent up demand. So not only is rate important, but price is important. It's a big part of this equation. And so there's not a better time than right now to get the price that you're looking for, because here's what's going to happen. All that demand that's pent up is going to start entering into the marketplace like we saw in 2020, 2021 when rates came way down and people were overbidding on homes. In some cases, like $100,000 and even more over list. They were giving up concessions and things like that. Right now, there's a tremendous opportunity because the prices have softened a bit. Sellers are providing credits, interest rate buy downs, closing cost credits. It really is a great time right now. So when we take a look at the jobs report, we were expecting 75,000. We got 22,000. On top of that, we had additional negative revisions for June and July of 21,000. If you look at June, we're now in the negative. That was negative 13,000. So basically 13,000 net negative job losses in June. It's the first time in 54 months that we haven't had positive job creation. Unemployment rate has moved upward. So again, let me reiterate, historical average is almost 8, and now we're at 6.29, potentially moving down further. We're going to start to see things really open up, and the opportunity is right now. Also, if you go back to 2005, so last year, 2024, we sold 4 million homes. Okay. If you go back to 2005, where there was about 50 million less people in the United States, we sold 7.2 million homes. So think about that from a demand standpoint. If that begins to enter in the market as pent up demand, again, we're going to see tremendous competition. So one other thing I wanted to show here is what happens with unemployment and recessions. So each of these gray bars represents a recession going all the way back to the, before 1950. We'll focus here like 80s and moving forward. Every single one of these recessions, including all the way back to the 50s, immediately preceded by low unemployment that begins to move upward, and then there's a recession and it moves up steeply. Again, it's low and then it moves upward and then it goes into a recession. Low, starts to move upward, enters a recession. We're starting to see this now. Unemployment moved up to 4.3%. And what this does to mortgage rates, historically, every single time that we've seen a recession, we've seen mortgage rates come down. Dramatic in some of these cases, like in 1982 went from 18 to 13, 11 to 8.75 in 1991, 2009 rather, 6 to 4.875. We're probably looking in this range here where we're going from high sixes potentially into the fives. So just as a reminder, The opportunity is right now, while prices are a little bit softer, sellers, because homes are sitting on the market a little bit longer, are giving credits and concessions. So when we take a look at the equation for affordability, it's rate plus price. So now is the time to get in before the competition. Great opportunity, great news today in the marketplace. Let's hope that we continue this momentum. All right. Thanks so much.